Unit 4. Bases of investment and financing of acquiring property. The purchase of a property nowadays exceeds the creation of a new home. Investing in real estate has become a practice, because in principle it represents a safe investment for the future, even if it is not the real estate where the buyer-investor intends to live. The real estate market offers opportunities for huge profits, but investing in this market is usually much more complicated than investing in shares. We know several types of real estate. In general, they can be divided on the basis of purpose and actual use. Residential real estate, residential buildings, houses and land intended for housing construction. Commercial real estate, buildings with office spaces, hotels, shopping centers, building land for the construction of business buildings, etc. Industrial real estate, production buildings, warehouses, mines, building land for industrial activity, etc. Special purpose property, buildings for the activities of educational institutions, hospitals, cemeteries, etc. Agricultural property, farms, meadows, forests, etc. Public property, roads, parks, administrative buildings, public sports facilities, schools and other public real estate. In real estate market the most active is business with residential real estate. Residential real estate is divided into dwellings, houses and land intended for residential construction. The houses are divided according to the shape into individual, row house, duplex, two-apartment, atrium, triplex etc. Apartments are divided into rooms, studios, 1-bedroom, 2-bedroom, 3-bedroom, 4-bedroom, and 5-bedroom or more. Real estate characteristics as marketable products can be classified into the following groups. A. Physical properties. The basic characteristic of real estate is their immovable quality, however, only for land can be claimed to be truly immovable. Buildings and other improvements can be moved, but any such move is associated with high costs and therefore only happens exceptionally. Similar is true for indestructibility of real estate, whereby the indestructibility of the land allows long life for buildings and other improvements. In this context, account must be taken of the economic sustainability of the real estate, which depends on the various environmental effects and can therefore be distinguished from the physical period of use of the property. The next physical property of the property is heterogeneity or diversity, since it is not possible to find two completely identical lands, buildings and other things that are classified as real estate. B. Economic characteristics. The rarity of real estate, or their insufficient supply, due to a fixed physical offer of land is one of the basic economic issues related to real estate. In the case of demand increase, with a greater and more intensive use of land and space, we can increase their supply, therefore it is only a relative rarity of land. The physical and, above all, the economic location of real estate influence the different use and value of real estate. The decisions of individuals and groups regarding the location of real estate are primarily influenced by their availability, exposure of position and personal preferences. Real estate is characterized by the interaction between uses, improvements and values, commonly referred to as the interdependence of real estate. An important economic feature is the long repayment period of real estate investments. C. Institutional characteristics. Real estate laws and various regulations, such as local and regional spatial plans, rent controls, controlling the parceling, etc., have a strong impact on real estate. The nature, appearance and use of real estate are influenced by local and regional habits. Real estate and community development are more or less affected by various real estate associations and organizations. There are several ways to invest in real estate. 1. Rent. Practice that is as old as the ownership of real estate. It is the idea that a person will buy a property and rent it immediately, in order to earn a profit. The investment is repaid eventually. In doing so, the lessor is obliged to repay the mortgage, taxes, and maintenance costs of the property, other than those arising from the use because they are paid by the tenant, the rest is at the tenant's disposal. In principle, the profit will be the same as for the resale of a property, but it will build up more slowly. Thus, if someone buys a property in an evolving part of the city, rental is a good idea because the value of the property will eventually increase, and the rent will be higher. However, this is a long-term large investment which also depends on taxes and future sales. 2. Resale of real estate. There are two options. The first is buy low, sell high, that is buying at a low price and selling at a high price, which is possible in the fast evolving part of the world or city, while the other is fix and flip, that is repair and resale, which dictates that a decayed property be purchased which is then repaired and sold at a higher price. It is important that the property is sold much below the price, or renovated in the way to bring about an appropriate profit. 3. Real estate investment companies. Businesses may be small or large, but they operate by the same principle. They represent a solution for all those investors who want to have real estate for renting out, but who do not want the burden of the owner. Such companies or associations actually purchase or build a certain complex of buildings or apartments and then sell them to investors. An investor may own one or more residential units, but they are still managed by a real estate company, maintenance, advertising, etc. In return for managing real estate, companies take a certain percentage of the profits. 4. Real estate funds listed on the stock exchange. It is about investing, buying and selling real estate, just like on a stock exchange, through the use of investor, shareholder, money. This is a sale that is similar to the sale of shares on the stock exchange. There are several ways and tools to finance real estate. An investor who builds or buys a property can do this by means of his own funds or by trying to obtain financial assistance from various sources, banks, other lenders, government agencies, etc. Savings and loan associations. It is a fundamental form of financing investment in real estate. The main activity of such institutions is the financing of the construction purchase of residential real estate, in principle through a loan or a mortgage. These are savings banks, investment funds, commercial banks, etc. The most important features of such institutions are the following. By using the savings of a certain individual, long-term depreciated loans are provided to the borrowers. These are loans intended for the construction, purchase or renovation of real estate. Commercial banks. Commercial banks represent an important element in real estate trading. In principle, they buy mortgages and liens on real estate from other brokers but pursue profit. Principles of their operation. 1. If a bank has a specialized department dealing with liens on a movable property, it competes and buys such liens on the market. If there are no specialized departments, in principle these banks offer loans for the purchase and construction of houses, apartments or agricultural land. 2. Banks buy liens on real estate and thus become a creditor in this relationship. Mortgages, mortgage dealers and brokers. Mortgage means a lien on real estate, as a substantive guarantee that the debt will be repaid. If the debt is not repaid, the mortgage means that the lender can sell the real estate and repay it from the process. Mortgage brokers are individuals or institutions that offer mortgages as a form of credit, concluding and selling them to other investors in order to generate profits. They can act as agencies with a view to redistributing assets for taxes and insurance. In principle, brokers and traders represent investors because they finance the construction and purchase of real estate from multiple sources. They generate income from payment of an installment, similarly to banks. One particular feature is the fact that the funds are drawn from several sources, and therefore they can offer the most suitable and favorable credit at that moment. Intermediaries are important, as they force even the largest credit providers, banks, to embrace competition on the market and to adjust prices and offers. Other sources. Individual lenders, also family members, although few on the market, still exist. Typically, private lenders prefer short-term loans, and, in principle, their loans represent less than 2/3 of the value of the property. Exceptionally, it is possible to obtain grants from the state or the European Union for investment in real estate, for example, if it is a renovation of an object that will create an innovative tourist product. You can get more information on obtaining grants in Module 4. If a foreign investor does not have sufficient own funds or has decided on a loan for other reasons, for example, a potentially higher return, he needs to provide the lender with a guarantee of his input. Most often, the insurance is concluded in the following two forms. Credit insurance. Insurance means the relationship wherein the insurance company undertakes to pay the insured person the insured amount in the event of a risk occurrence. In exchange, the latter pays a certain amount, insurance. It is therefore a method of risk distribution. Mortgage. Mortgage itself is some form of insurance instrument, because it is a lien. The whole idea is to insure the lender, since in the event that the debtor does not pay the debt, he can use his real estate, sell it and repay his expenses from the process. In a period of high economic growth, when lenders compete with one another to obtain customers, it makes sense to obtain as many offers as possible on terms and conditions of lending by different providers.